Welcome back to the LPR Trading Group YouTube channel. It's Dave again. I've got another video for you guys today. We're going to do a Sunday night market outlook webinar or session where I kind of plan out the first few days of the week. I don't want to say I'm planning out the week because listen, we're day traders and I'm just wanting to know what's going to happen the next day, the next hour, the next 30 minutes, the next few hours, right? So I just kind of want to gauge where the market's at in its current state and what we could possibly see for tomorrow. I will always revamp this I'll revamp this Sunday night market outlook that I put together in the morning after the on session closes, but I want to give you guys an overview of what I'm looking at here. So I'm going to pop open my trusty 𝗵𝘃𝐻 tool here, and we're going to look at a few things we haven't talked about just yet, primarily on the order flow side after we go through our regular candlestick charts, but it is something I definitely want to get into in the future and start talking to you guys about, which I will. What we're going to do is we're going to start with the plain and simple, right? Top-down approach. Let's go to the daily charts or the candlestick charts, sorry, and we'll start at the weekly. The weekly, I don't see anything major here that either red flags me or brings out big signs for trades. The only thing I do see is we've got weekly highs here. We swept, took a draw, and we came back into this range. Same thing for the bottom side. Swept, closed above, held back into the range, right? So really, bigger picture, longer term type trading, we're just trading between 44.18 and let's say 4600, 45.94. Okay, it is a big range, but that's just the range we're sitting in right now, and it is what it is. For day traders, it doesn't mean too much for me as in terms of what I'm going to do tomorrow for trading. So we'll drop down to a smaller time frame here, which is the daily, and we have something very similar on the daily. Of course, we have our draw, our sweep of the lows. We push up, pull back, we hold, and we go for a draw to the upside, right? So if we're looking ICT trading concepts, we swept these lows and price delivered to this draw, okay? Now, what is interesting for me and what I like to see here is we talked about this in a previous video. We've got this big daily fair value gap right here. Price actually pulled back into the fair value gap, wicked below it, but price held. We've also got the 50% area of this big daily range. So this below it should be discount of this whole range, and that's where price is holding. Fair enough, sounds good. Now, it's hard to put a trading plan together on a Sunday night for the whole week, but I want to have an idea in my head, like I said, of what we could possibly do tomorrow, and I do have an idea of what we could possibly do tomorrow if things play themselves out. I go down to the 4 hour. It's very similar to the daily. There's nothing I could really mark up here. There is a fair value gap here on the 4 hour chart. That's really clear. Price is holding it, went into it, got rejected. Okay, so we could anticipate maybe price wants to go down to this area to sweep a little bit or this area to sweep, okay? Moving down in time frames, I go down to the 60-minute chart. 60-minute looks very similar to the 4 hour. I'm getting pretty much the same vibe, right? I can see the draw up top. I can see the draw down below. I can see the sweep we put on last week to get our shorts right here. We swept, got shorts into, I forget what price we got short in. Anyways, go back and watch one of the videos. All the trades are in there in my ICT order flow playlist. So we get short, we got that sweep, perfect. Now where it gets interesting for me is I get down to the 30-minute chart, okay? Now when I get down to the 30-minute chart and we really kind of zoom this sucker in here, I see that price went for this really big drive, and when we took this 60-minute draw to the top side here that we got short off of, we held this 30-minute fair value gap to that 50% area, which is good, right? These concepts are playing out well, and we held this, and we went for a drive to the upside. There is some loose and leftover liquidity down in this area, and what I do at this point is now I go over to my order flow, specifically TPO, and I say, okay, is there anything interesting within the market that tells me we could possibly get back down into this area to clear some of this imbalanced price action up? So after the 30-minute, this is the lowest time frame I go to, by the way, on a Sunday night when I'm just doing a market outlook plan for myself, is the 30-minute chart. I don't want to dial anything in. There's still a complete on session, which is the overnight session that we have to get through. And I could make all these plans on the 1, 3, and the 5-minute, and price is trading around here, and I wake up tomorrow and price is down here, right? And then that plan's completely shot. So I drill it down to the 30-minute, and that's it. So now that we're done with our candlestick charts, and I kind of know where I want the price to go on the candlestick chart, possibly down to fill out this 30-minute fair value gap, I now go to my order flow. And my big picture order flow is going to be my TPO charts. TPO charts are time price opportunity charts. We haven't talked a lot about these, but we will, okay? And if I could give you a recommendation for a book, the book is Jim Dalton. Let me just type it out here. Sorry, author is Jim Dalton, and the book is called Mind Over Markets. Okay, if you guys pick this book up, I recommend you do not get the Audible version. There's a ton of pictures in this book, and you're going to need them. I don't think it comes with a PDF, so buy the book or look for the PDF online, whatever it is. It's going to help you understand what we're talking about here, okay? But I will get into it in future videos. I just can't cover everything all at once. So now that we know where we want that draw, and let's go back and just look at our 30-minute chart quickly. We'll just take a mental note of the price. At the low of this candle right here, we're around 4,500, right? At the low of this print, and we go down to like this 44.98 with a little bit of slack, right? We can go down to maybe 95, 96. So we know we're looking within this 3 to 5 point range from 44.95 to 4,500. What could the TPO charts possibly show us within this price range that might show us a little bit of interest or show price interest to go down in that area? Now, a TPO concept here is called poor highs and poor lows. We know that the auction works vertically, or at least the people that I'm working with and I trade with know that the auction works vertically. The market doesn't move sideways, right? It moves up and down. That's it. We have a price. The price either goes higher or lower. It's just a vertical ladder. So in order for one of these vertical auctions to finish themselves, just like if you go to a car auction, you know, can I get 10,000 going once, 10,100, right? Once we don't get that 10,100, what happens? The offer steps down. No one at 10,100, 10,050, 10,050, no one 10,050, 10,025, and it keeps stepping down. Those prints left at those areas, 10,100, 10,050, 1025, that's called market excess, okay? This is, or signifies a completed auction. There are no more buyers willing to buy price up higher, okay? There are sellers involved. What do the sellers have to do? They have to move their price down. Same goes for the reverse side of things, right? If we're selling price lower, if there's no more sellers that want to sell lower, buyers eventually have to move up. So if there was an inverted auction and there's a vehicle going, can I get $100, $100, 95, 95, it's going down, right? They want the sellers to step their prices down. As soon as sellers don't want to step their prices down, the auction forms excess, which are limited participants down here, and then we push the market back up into an area of balance. Now, for poor highs and poor lows, it means that a market hasn't formed excess. What is excess? Look at this L period right up here. You see these single prints? That is the auction. There's participants here, 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 and this is time-based, right? So a lot of time spent in these areas. As we start ticking over these highs, very limited participants up here. We do not spend a lot of time up here, right? Auction forms excess, comes back down. This is a clean high. Now, when our market profiles form highs or lows, and they do not give us at least 2 ticks of excess, in this case, we have 1 tick of excess. You see this L period. There's only 1 L period at the low here. If we had 2 L periods like this, this would be considered a completed auction to the downside. So what does this single L period make up? This single L period makes up a poor low. Poor lows in the market typically want to get retested, okay? So I'm going to take this line right here. I'm going to drop it on here. I'll make it red. We'll make it one of these guys, and I'm going to go in, modify the text, and I'm going to say poor low. All right, so this tells me the market, maybe not this week, maybe not tomorrow, but the market wants to come back and make excess at this low. All right, so what does this low line up with? This poor low sits right at 45.0075. Perfect. If the market wants to come back to 45.0075, what does this line up with on our regular candlestick charts? And just for a visual, we'll drop a line at 45.0075. 45.0075, it lines up with this low, which was the poor low. And if we get below that poor low, which the market should want to do because it wants to leave excess at a low and complete an auction, what could we possibly do here? Well, if the market played out just like I drew on here in this yellow markup, if the market got below this low, what could that possibly be? A draw on liquidity, or a sweep as I call it, right? A draw on liquidity into where? The completion of a fair value gap. What could we possibly wait for? Now we go intraday once we get that draw, if we get that draw, and we pop up, we wait for a market structure shift, displacement, PD array as ICT calls it, or a setup, and we look to get long, targeting highs. Maybe not on this day, maybe not on Monday, right? Maybe not on Tuesday, maybe not on Wednesday, but this is the plan that I have that makes the most sense to me right now, is for the market at some point, whether it's tomorrow, Tuesday, Wednesday, to come down here, hold. We do not just, well, you guys can do whatever you want. I will not just buy the hold of this. Once we get into this area, I will flip over to my lower time frames, 1, 3, and 5 minute, and I will wait for an intraday setup on this big picture play. If the market comes down and just completely blows through this 30-minute fair value gap, totally fine. I wasn't going to get in on that fair value gap anyways. I just need a play if the market gets there, okay? Inversely, if we're looking for the market to drive up, I really don't love playing this as a draw. We could sweep this high again and come back down. I don't really love playing this as a draw though. I think if the market's going to start driving up and we start breaking these types of pivots, I'll probably look to get long up to and through this area, because I think at that point the market would want to reach higher. All right, the market would just simply want to reach higher. All right, that is my Sunday night market outlook, and I've kind of got one play in mind. I showed you guys the chart perspective of what I look at. I showed you guys some of the order flow that I look at, the TPO, which is a new introduction in this section right here, and this is what I have going into tomorrow. Again, I will update the plan in the morning, just depending on what the on session does. Do not marry this plan, but have a plan going to every trading day. You're only as good as your plan. All right, I hope you guys enjoyed this video. Like, comment, subscribe. I get back to every single comment. With that being said, I'll take off. Good luck on the charts, guys. Cheers.